It's Monday. A lot to unpack today. Some juicy stuff, some spicy stuff. We're seeing some weird action in many different assets. We're seeing the 10-year in Japan hit all-time high, gold hit all-time high, Tesla hit all-time high. Bitcoin on a bit of a rampage, but it's done that a few times before. It's a bit of a what I call the 90K fake out. It runs to 90K and then reverts back to 85K. We'll try to unpack all the crazy stuff that's going on. And then people who are complete perma-bears flip. No, perma bulls, sorry, flip to bearish. What's going on in the world? And that could actually be a good sign. But before we jump in, let's say good morning to Mando and the team. Mando, how you doing?
I'm doing great, man. Yeah, it's I'm on the road, so not my usual setup, but all good.
Your audio is perfect.
Audio's perfect. DCA with you guys for Christmas.
Yeah, thank you for joining.
Congrats on that championship win, bro. That's amazing.
Oh yeah, I won that trading competition, which is a nice present.
Very nice. CTO, all good with you? I know we're having some romance tonight with the
exactly celebrating Christmas with all of you here. Yeah. So let's see if Santa will come or not.
Yeah, so weird stuff happening in the markets for sure. Marty, all good with you? Is your golf shirt on?
Yeah, all good. Traveling for Christmas, obviously, but doing the show. It's cold and early, but here we are. Let's do it.
Yeah, I'm the only one stuck in a bunker every day of the week, every
bunker
season.
Boy.
That's where I belong. Don't let me out. So let's get into the story. And thank you all for everybody for being here, the mods in the chat, Sean DT, DK8, and everybody else. Let's talk about, add to stage. This is called the Great Flip. And the reason it's called that is for a number of reasons. There are things happening behind the scenes that we really need to dig into and find out exactly why they're happening. But let's jump into the chart first, and then we get into some wild projections, some wild pivots. We'll look at some Wyckoff from Marty and some liquidation levels and some macro views of the world. But CTO, Bitcoin, when I look at the chart, it's always the typical fake we've been through now for the last 3 or 4 weeks. We run it up to 90K and then falls back to 85K midweek and then runs back up again at the weekends. Can you shed some light on where we are, and is it going to do the same thing again this time?
Yeah, I mean, it is choppy here, right? That's what we're feeling. Like you said, it runs up, it goes back, it runs down, it goes back. And overall, it's not moving much, right? It's at the same price as it was exactly a month ago, plus 2 days. So, of course, we have seen some recovery here. This bear flag, as I drew it, it confirmed, but then not much happened. Instead, price reverted. There's some echo, I think, maybe if you guys mute. So I think what we're seeing here, this strength now is more a result of other markets, like gold hit all-time high, Tesla hit all-time high, as we will talk about later. And I think that that's the strength we're seeing here. If we're comparing the ratios, it hasn't really changed much. Like Bitcoin versus gold is still pointing in the downwards direction. Bitcoin versus S&P 500, there's not much of a recovery here either. So while there is a little bit of recovery, we don't really see I don't see the strength yet. I hope that of course, I'm the biggest Bitcoin fan. I hope that we get the strength back and that we get some real rallies, but it's not confirmed yet, I would say. We do get we still have the choppy price action. That on the other hand, we haven't dumped to much lower levels. That could perhaps have been the case already.
And December 1st, picture point bottom at 90 or 85K December 1st, and then again December 18th. Could that be construed as a double bottom? I like to look for double bottoms myself.
Yeah, absolutely. I mean, if we clear this, maybe switching to this view instead, if we clear the highs here, this would be a double bottom. So if we clear the high between the bottoms, then it becomes a double bottom. So here is one bottom and here is one bottom, and the high is here. So if we clear this level at about 95,000, then it becomes if we clear I think the key construction here, regardless of how we draw it, is if we clear about 95,000 and leave this construction here, some sort of range or double bottom, that could, that would be the signal of hope, I would say, that we're running upwards from here. But we're not really there yet. I think another positive signal, if we back that up, is that the low of this construction, which was back here at November 21st, that low is still holding, and the volume is still the big volume, which is one of the biggest volumes of the whole year. So this could be the ending volume of the move down, and we move up from here. But I don't know yet. I haven't made the big repurchase. I want to see a little bit more confirmation first. But it could be.
James?
You're muted, James.
Thank you. I hope there's no echo from my side. Anyway, Marty, you shared this as your Wyckoff. Bitcoin to 95K, then retraced to maybe 85K, and then bounced to 126K, which is interesting because we have some other so-called experts talking something similar, like a very big move for springtime, March type timeframe. Tell us about this chart, Marty, and where you think we could be going.
Sure. I mean, I've been using the Wyckoff method. If anybody doesn't know about the Wyckoff method, it's been around for a long time by Richard Wyckoff. It's basically, it focuses on understanding how large institutions or whales accumulate and distribute assets, basically driving market cycles, like with supply and demand. Basically, it says the market is controlled by whales, by large institutional accumulators. So they're trying to accumulate the asset and distribute the asset. And it pretty much is the most accurate of all methods. Obviously, it's not 100% perfect, but as you can see, this is the third accumulation and reaccumulation we've gone through. Obviously, we had distribution through the 126 phase. Wyckoff called it almost exactly. And now we see here we're coming to the accumulation phase, and you can see how almost exactly it goes to the Wyckoff method of accumulation. And you can see all the key levels of support and resistance, but this is an accumulation strategy. So basically, we're all aware of what happened at 126, which is the reverse of the spring. And just by the way, the spring doesn't mean in the spring, the season. The spring is an automatic reaction. It's a price level in which whales will re-enter the market, driving it up, to break resistance. And so as you can see, the expected date there I've got is it's a prediction. It's not 100% accurate, but it looks like we're going to have a fake Santa rally into December 25th. Everyone will think it's the end. It's a double bottom, blah, blah, blah. It'll hit key resistance, like CTO said, at 95,000, and come down and remove all the longs that have accumulated since the 21st of November. So all of the long positions that have accumulated at the bottom in this accumulation will get flushed. That'll be the spring. You'll see the highest volume of the season, absolute chaos, and that'll be your automatic reaction. And from then on, we'll trade up. I think we'll trade up pretty aggressively through the LPS and the SOS into January, February, March, etc., following the Fed and the easing process on the macro. But the big caveat here is expect a fake out.
Exactly.
That's what Wyckoff is telling you. There will be a euphoric moment running to 95. Everyone will think it's over, but that's probably a dead cat bounce. And once again, no one knows. We don't have a crystal ball. The controllers also know about the Wyckoff method. They know that we follow it. So they might fake us out there, and we might move up from there. But anyway, it's a good thing to see, but you can see how accurate it is. Unbelievably accurate.
And the reason I said spring is I know what the spring is in the Wyckoff, but there's another spring too. This guy, okay, Arthur Hayes, and another one of these guys that makes these predictions, either hella bearish or hella bullish. He never hits. Mando, I'm looking at you right now. Now he's saying 200 grand by March. Now, he did have something very interesting to say. He wasn't picking a number out of his behind, but he was talking about, he looks a lot of kind of central bank liquidity and macro. And he said the main reason, he says, is the change in global government policy. It points to a new strategy. For example, the Federal Reserve is now I call it stealth QE. They're calling it reserve management purchases. We're seeing another one happening tomorrow for about 7 billion. And it sounds technical. Basically, it's money printing in disguise. And historically, when the government pumps more money into the system, Bitcoin normally follows. So he is extremely bullish. He does believe we could fall. We've got to break through 88 and then through 95 and then 124 and then 200K. How wild is this, Mando?
It's not really that wild to me, at least not from Arthur Hayes. Like, if you ever listen to Arthur Hayes speak, I think about Arthur Hayes is as a human being, he is a headline writer's dream because he has very, very bombastic statements, which then make a headline like this and everyone follows it. If you listen to his speak, he's kind of said the same thing for a long time, just that Bitcoin will go higher because global money printing is just going to keep on going higher. And this is one of the best assets to own. I think where he gets it wrong sometimes is pointing out what's going to be the trigger for that. And when, like, assuming the second order impacts, that's where it kind of, sometimes it doesn't really quite make sense. But his general thesis, his overall thesis of just, we're going to see massive money printing out of Asia and out of the West, and this is going to drive Bitcoin higher, I agree with. I don't know about this sort of timeline. 200K by March just seems, again, it feels like one of these things where everyone picks up on it and wants to hold him to it. And then he'll probably speak in March if we don't hit there and go like, oh, well, I think it'll happen in September. But he is a long-term bull on Bitcoin because of money printing. And I'm with him on that. But I don't know. I'm far more in like CTO's camp here in like the short term. I think if you're a short-term trader right now, this is just pain. Like, Bitcoin is not a fun thing to trade right now. And I completely also agree with what Marty's saying. What we've seen here is like it's hit 80K and then we're slowly drifting higher up to 90, 91K on Bitcoin. Do not trust this price action either direction right now. Do not trust it. This is a sort of price action where you get a belief and you think you can follow the trend, and then it rugs you on both directions. So I'd be very, very wary of being overly bearish, overly bullish at this point. I think we need to see like sustained testing of some of the support levels or resistance levels before we have a breakthrough, and like this sort of like slowly trending upwards and then slowly trending downwards market, that is just there to take your money. So be very, very wary of it.
Exactly. The market makers are in control. And we do have a little bit of that QE coming from Kalshi Fed to inject 7 billion into the market tomorrow, which actually is today because this is from yesterday. So more of this money is coming in. But there's another, let's look at the macro real quick, and we're going to go back to Marty real quick on this. Walk us through all the stuff, like, because I'm seeing new Tesla all-time high today, gold all-time high, Japanese 10-year all-time high. But there are other things that are kind of depressing, like oil, multi-year low, etc.
Yeah, James, I share this chart daily on my X. I mean, I think it's just a very good high-level zoom-out perspective on the macro and where we are. And the top four you can see are very clearly in upward trends. That's Bitcoin, gold, global liquidity, and the US stock market. And the bottom four are definitely were in downtrends. We can see the central bank balance sheets have reversed on the QT ending, going into quantitative easing. You can see the higher low. And we have evidence of slowly QE. You can call it whatever you want, but the creation of new liquidity. And we can see the dollar is on a downtrend. We can see oil is on a downtrend, and we can see financial conditions are a downtrend. Financial conditions are the aggregate of the dollar, oil, and the US Fed funds rate. So you can see the bottom four indicate clearly a downtrend in financial conditions. In other words, we're about to see easing and growth. And the top shows you we're on uptrends in risk on assets and stores of value and liquidity. So it very clearly shows you the high level picture. So as a trader, I think, short term, like Mando, I agree with Mando 100%. In the short term, I would just follow liquidation levels. In the short term, the market is controlled by, derivative market, liquidating longs and shorts at high leverage. But on the long term, on the high time frame, for the spot buyers, for the accumulators and the people who are holding this asset, or all assets for a longer term, let's say till 2028 to 2032, this is the chart to look at. Definitely, you need to buy the dips in the long term, in my opinion. As the bottom things turn, the top things will accelerate. That's pretty much where we are. So it's a really nice chart. I recommend everyone to follow it. It gives you a little bit of an easing feeling. But as you can see with Bitcoin, it was a really wonderful correction, pullback on profit taking. I mean, obviously, I have my theories that it was China and obviously long-term holders that sold into the cascade. And now I believe that we have a gamma trap. In other words, IBIT option dealers, MicroStrategy option dealers have now trapped the price for the accumulation stage of the Wyckoff using the option tables and gamma. So anything over 90, they'll sell, and anything over 88, they'll buy. And they're just holding it in that range, hedging and accumulating, in my opinion. Now, what's interesting is on December 26th, James, is the largest relief of gamma in history, 287 million. Let me get the exact number. That's the 26th, which lines up with the Wyckoff. It's on the 26th of December. We'll see 278 million of gamma rolling off. That's 54% of total market gamma will disappear. And the prediction is that this will end, and the volatility spike from that will cause delta adjustments and will break out of this channel. And who knows where we will go. That supports the Arthur Hayes thesis. We may see a short squeeze through the Binance order book. Yep.
And interesting as well, Amanda, you're going to laugh at this. CTO, can you pull up a silver chart? Because we got a banana zone over the last 6 weeks with silver. So, people knew silver typically lags gold, and gold's been on a rampage. And again, the new all-time high today. But the silver action is quite incredible. For such an old asset to double in 6 weeks is unheard of. Mando, what did you think of the silver action in the banana zone? What alarm bell is that ringing for you?
It's a continuation of what we've seen this year, right? So we've seen it in pretty much every precious metal has got a chart like this. So it's platinum, palladium, gold, silver. This has been the trend, and this has been what the Bitcoin chart was meant to look like.
Yeah,
and it's been perplexing why Bitcoin hasn't followed this. Maybe Bitcoin got caught in the 4 year, maybe it got caught in something else. But this is the banana zone. This is exactly what everyone was talking about: higher central bank balance sheets, money printing, debasement, only accelerating from now on. Like this is what it should have happened. And these are much more interesting charts to trade, because these look like they're breaking out to new highs. Gold hit a new all-time high today. Like maybe it will go to 5K. I think that these could continue. Like it's perplexing that gold is that Bitcoin has not followed assets like this, but I think that the same things that are driving these charts are the same things that you can get bullish about Bitcoin for.
Yeah, CTO, your audience, I know we always have stealthy kind of silver and gold stackers all around the place. Maybe some people playing with uranium and stuff.
Yeah.
Do you believe this was all orchestrated, or is this heavily driven by the Chinese and the BRICS giving up on Bitcoin and focusing on precious metals because they see the end of global fiat?
Yeah, I mean, I think there's some echo here. Maybe Marty, also if you can mute.
Let me try. Let me know if it works.
Excellent. So we have talked a lot about gold and silver for these couple of years, actually, but I'm also surprised that it went this hard, this fast. And there are a few key learnings here. One is that there was a breakout in silver, and it was in the spring 2024. If anyone's interested in classical charting, this is an inverse head and shoulders. It broke out in March 2024. And then there's been several other bullish patterns, and it has just continued up. And in gold, there were also signs. With the big breakout here was slightly 2 months before. It was in February 2024. From this generational breakout of about 2000. And it really basically doubled from there, and new all-time highs again, several patterns along the way. So, I mean, there has been signs that big players were accumulating both gold and silver already almost 2 years ago. So it hasn't like come that sudden. But I want to warn everyone here, because most people ignore this, didn't see it, and start looking at this chart basically today, and they say, oh wow, this one is going up, maybe this is what I should buy. But just have to be aware, I'm not telling anyone what to do, but have to be aware that this is quite high up on a parabolic move. I have no idea how long it's going to go, but just realize that if this was an altcoin, you would be like late on the purchase. The smart money bought almost 2 years ago. So just be aware of that little bit, that at some point, perhaps there will come a correction, or there never will. Maybe fiat money has lost so much value that this is, the new price of gold and silver and stocks and real estate and everything else, potatoes and eggs. Maybe everything has rebased. But just be aware that it is kind of late. That's what I wanted to get in there.
This is so interesting. Amanda, I've got one for you based on what CTO and Marty just covered. And this is a far-flung theory. And we all know gold and silver have been manipulated for decades by players like JP Morgan, etc. We also know circa 3-4 months ago, JP Morgan and others, Goldman Sachs, started talking about the debasement trade. And they were mentioning Bitcoin as part of the debasement trade for a long time. Did the big manipulators give up the ghost of keeping a lid on price for things like silver and pivot over to Bitcoin to keep a lid on that price because it's easier to control because it's a much smaller asset? And it's a very wild tinfoil hat theory, but it's been on my mind.
If I was to pick the most likely, let's say, conspiracy theory of big players doing this, it would be out of China and out of Asia. It's very, these are assets which have been very publicly bought by the major Asian central banks, particularly China, over the last decade. And they've also had a pretty anti-Bitcoin stance. If I was trying to hurt Donald Trump, then this is the sort of thing that I might do. So if I was to guess if it could be anything driven by a larger player, it would be out of China rather than out of the Wall Street banks.
I mean, I can comment on that.
Yeah.
I think there are three factors that people need to understand. First of all, the politicalization of Bitcoin by Donald Trump. I think Mando is 100% right. I think that the minute on October 10th, the minute Trump did the tariff retaliation to China, we saw that massive capitulation event, which was China dumping their Bitcoin, in my opinion, to attack Donald Trump's political, his political standing. The other thing is that crypto doesn't have regulated markets. We all know that. Silver does, gold does, stock market does. So, once China did dump their Bitcoin, creating that massive event, we saw the cascading effects, and Binance's exchange breaking. There's no regulation. It was a shit show. So that's a problem. And then the third thing is, China is not, and the banking system is not threatened by gold and silver. They're threatened by Bitcoin and by stablecoin networks. So, you have three major adversaries against Bitcoin, while silver and gold don't have any. I think these are very important points to understand when looking long-term and explain a lot of what's been going on. But I also agree with the CTO, don't chase this. Don't chase the metal train. I think you missed the trade, in my opinion.
Don't buy silver at 66.
In my opinion, they're all bubbles and it's all paper anyway. It's all paper. These aren't real physical prices.
But it's so funny because I covered that topic, Mando, that you mentioned and Marty mentioned yesterday, and that is how, first of all, Europe is even concerned about the US using stable coins to basically prop up the dollar. Russia is worried about that as well. You have the BRICS nations. They hate the dollar. They're dumping the treasury. They're dumping, maybe the old miners from China from years ago dumped all their Bitcoin, Marty, as you said, because now we're seeing this bifurcation in the world. The US is doubling down on digital, which is Bitcoin. They're not chasing the gold trade, but BRICS, Russia, etc., central banks are stacking gold like mad. So now we're seeing the world split. The question is, for all of you around the table, real quick, who will win at the end of the day? Will it be the hard metals that are been around for 5,000 years that are designed for global financial fiat Armageddon, or will it be digital gold, i.e. Bitcoin? CTO, you first. Yes or no?
digital gold.
There you go. Marty, what do you think?
Yeah, I mean, I've been a big believer in this, and Putin's advisor pretty much confirmed that my theses were somewhat accurate when he agreed almost exactly with what I've been saying. I mean, you guys must understand, and everyone out there, that the US's debt is a massive problem and is unpayable at the current valuation of the dollar, which is the reserve currency of the world since the wars. And I think that we're going through financial repression and an absolute major monetary shift, 100-year shift, to try and relieve that debt. And there are only a very few ways to do that. Really, the only way to do it is to devalue, systemic devaluation of the dollar. And they did it in 1933. Roosevelt signed that executive order devaluing the dollar with gold. Then 1971, Nixon did it again. He closed the gold window. There was like a 96% dollar devaluation. And then in 2008, I believe they started the next dollar devaluation strategy. And I mean, coincidentally, that's when Bitcoin white paper came out, right? So it begs the conspiracy, perhaps the US government is behind Bitcoin in the beginning. But it appears as if stablecoin and Bitcoin is the next machinery that they'll use to devalue the dollar. And, if you look at it in a phased approach, first of all, stablecoin solves all the problems that gold always had, which was how do you distribute the devaluation of the dollar? And by injecting stable coins backed by treasuries into the world, they create a buyer of last resort for treasuries. They cure the treasury market. They create infinite printing of treasuries, but also, they peg it to the dollar, but then they can devalue the dollar by devaluing the value of treasuries. So all of a sudden they're devaluing the dollar, but yet keeping the peg and having a global US dollar, digital dollar. I think these are all strategies that are probably taking place behind the scenes. Now, they don't happen immediately. It takes years, sometimes decades to prepare for these things. And I think they started in 2008 with the QE. I think COVID wasn't a coincidence. I think that was part of the quantitative easing setup. And then now we've seen the end of quantitative tightening and the Genius Act. So phase one was the Genius Act. That's basically creating the plumbing. Phase two is adoption. We're seeing now banks adopting it, institutions adopting it. It's getting integrated into the payment systems. Phase three will be market structure. We know it's a little delayed from the government shutdown. But once that happens and Bitcoin is solidified as a commodity, I think you see the chart fly and things like that. And then obviously the networks that carry stable coins globally, Solana, Ethereum, Sui, all these things are going to have their moment because they will be the plumbing on which all tokenization exists. Tokenization of the dollar, of real world assets, of the stock market, of everything. And then there'll be the reevaluation event, which is planned probably for the end of 2026, maybe early 2027, when the government will just declare a new value for Bitcoin. And the market will catch up very fast, but they'll back their $37 trillion of debt with $25 to $30 trillion of value through gold revaluation and Bitcoin revaluation. And they'll have a dominant reserve currency. And they'll distribute the devaluation. So, I mean, this is not a wacky thesis. You've got Putin's number one advisor of 20 years saying the same thing. I think this is what's happening, and we're watching the mechanics play out.
Exactly. The dollar devaluation is on the table, and this is from Edward. InvestAnswers getting this all wrong. Hey, I used to trade currencies for a living, buddy. I know exactly what's going on. I'm asking questions here of the panel. But the point is, the dollar has been letting itself slide. If you look at the dollar euro, as you're very familiar with, probably CTO, etc., they want a weak dollar. That's what the whole thing is. They want to run inflation hot in a stealthy way. They want a weak dollar to solve some of the deficit issues and also hurt China.
Well, rolling over, James, to roll over the debt. They need a weak dollar. There we go.
Exactly. So it's, we're well aware of that. But yeah, it is so interesting. Let's get back to another story real quick. This is the Fundstrat Crypto Outlook, which is a paper that went out to clients. And what gets me here, much respect to Tom Lee, etc., but why is he telling the world at public conferences, matter of literally less than 2 weeks ago, that he still believed ETH would go to $12,000 by the end of January. And then his chief strategist for digital assets says ETH is going to $1,800. $1,200, $1,800 is big. They also set price targets of Bitcoin at 60 to 65K being very attractive. That's kind of just under the 70K floor we've been talking about here since the election a year ago, more than a year ago. Sol 75. The Mando, I'm going to give this to you first because you have some inside baseball on a few other items. But is it possible that these people get on CNBS and say one thing, and then they have private papers to their institutional clients and say another?
I mean, I don't know. Investment banks is sometimes done that the research department has like very independent views for them. The trading department, for example, or different departments. I don't know about a fund like this. It doesn't seem like it's big enough to have your head of digital asset strategy and Tom Lee, who runs the fund, as far as I'm aware, as one of the co-founders, having such a different view. There is some talk about the fact that Tom Lee's compensation, I think, is paid on January 15th.
Yes.
And part of what he gets paid for is whether they hit like 4% of ETH ownership or 5% of ETH ownership. I think he gets some performance stock units on the back of that. So there may be some personal incentive for Tom Lee to pump this into January, so to speak, or continue to buy as aggressive as he has been into January, which might be different than the fund. I don't know about that. But at the same time, yeah, look, I think I'm more in agreement with the fund strategy person than Tom Lee here. Tom Lee is kind of a bit like Arthur Hayes. Like he likes a big headline, and he's more of a salesperson. He's had some crazy calls for where things are going to go in very, very short time zones. But the fact that he's kind of like moved it to January makes you ask some questions, I would guess.
Yeah,
I mean, do you guys
the motivation here to stack? He gets paid to buy more ETH. Is there any mention of any particular price? I have the tweet up here that you shared. Or is it just?
Well, if he says that, look, if he also gets awarded performance stock units when he hits 4% and 5% of ETH supply, respectively. He's been very keen to get to 4% of ETH supply, right? So it kind of
show me
makes
the
sense.
incentive. Show me the incentive.
Yeah.
You know that.
I mean, guys, I think that Tom Lee is very much on the same page with what I've been talking about. Remember, do you guys know where Tom Lee was working on the 2008 financial crisis?
Mobile.
No, he was at JP Morgan's chief equity strategist.
No.
Okay. So Tom Lee has a deep history, 2007, I think, to 2014. He worked for JP Morgan. So he's very much aware of this underlying crypto strategy. As far as I'm concerned, is hence why he's so bullish, and hence why he's so bullish on stablecoin networks. So I think there's a little bit to do with that. But I agree with Mando. His pay package is very much tied to his ability to pump the price. So be very wary of talking heads, people. I don't think Tom Lee's ever actually used Ethereum. I don't think any of them, Michael Saylor included, really understands this technology. Be very careful of that and wary of it. Anyway.
See, Tio, what do you make of all of these shenanigans behind the scenes? Saying one thing, doing another, incentives like this to stack a bag?
Yeah, I mean, of course, I don't have any insights either. I just read it like, okay, so Tom Lee talks big headlines and probably has a long-term positive outlook. Then there's some more analytical guy who sits in the back office analyzing things, and he probably comes to the same conclusion as me, like the chart looks pretty bearish. So that's what he says. For now, there's a bearish market structure. What can I do about it? That's probably what he has written in his report. And then someone interview him, and that's what he says. He hasn't put a big strategic hat on it. It's just, saying that it's a bearish chart. And then that can change tomorrow, and then he'll have another picture. That I have no idea. I'm just speculating. I'm just saying it could be a simple explanation like that.
I think that's correct. James, you're on mute.
Yeah, let's talk a little bit about what could happen in 2026. This has been bubbling up behind the scenes where the top 8 financial institutions of the United States, which own over half of all banking assets, over $14 trillion by my estimations, all of them are either setting up custody for their high net worth clients or the clients, or trading. And Bank of America says not yet. But Bank of America have signaled that by March this year, 2026, they will have both probably up and running for their high net worth clients. And these banks, they may just sound like little banks that you see on the main street, but no, behind the scenes, they have a lot of very, very high net worth clients that manage a lot of money, and they're going to be exposing them all suddenly and at once to crypto, to Bitcoin and other things. Mando, any perspective on big US banks all going in? And could this also be a reason why they want to keep the price low for their clients rather than let it run to 120 again?
I think this is bullish. I mean, every single day I read about a new part of TradFi getting into crypto. It's largely been about stables, as Marty was saying earlier. Like, we have a new headline around that pretty much every single day around payments. Just to see this and to see, like, we are going to see pretty much every single one of them have some sort of crypto onboarding over the next 12 months. This is why it's really tough to think if we're going to be in some sort of like really, really sustained downtrend for at least crypto use case. I do think part of the issue around TradFi coming in is that there is a lot more talk of TradFi sort of valuation frameworks for everything now. So I think crypto did kind of live in this bubble of tech before it had maybe reached product market fit, and now we're starting to it's starting to hit product market fit. The valuations have got to continue to make sense in terms of earnings and in terms of use case. And I think for some of the L1s, that's not going to be the case. So I do think this is like bullish for crypto adoption, but I do think what we're starting to see is some realization that some of the things that we built were overvalued.
The thoughts on this, Marty? The big banks? Could that be a
Yeah, I mean,
for
this will
2026?
once again, I've been a big proponent for the banks being in the final accumulators, and I think JP Morgan, Citibank, Bank of America, all of them are getting involved. JP Morgan today announced that they're going to have offer crypto trading for the institutional clients. It's all happening, just like Mando said, every day. It just feels like every day, every week, there's more bullish TradFi adoption. And then there's this really interesting quote that I read. Listen to this, guys. Citi and JP Morgan published bullish near-term price scenarios for Bitcoin. Citi's 12-month base target is 143,000, optimistic 189, very close to Arthur Hayes. Bearish 78, very close to our bottom, we called it 80-83. Citing easing regulation, growing adoption, and US policy momentum. Very clearly said. JP Morgan projects roughly 170K within 6 to 12 months, arguing deleveraging in perpetual futures is likely complete. Okay, that was our October 10th event, arguably created by the banking system in collusion with whoever they need to. And Bitcoin is attractive on a risk-adjusted basis versus gold. This is from JP Morgan. Both banks acknowledged recent sharp volatility and liquidations, but said market structure and institutional positioning point to meaningful upside. I think that tells you exactly what's happening. There you go. They created a liquidation event to remove leverage from the system. China exited. The cascade created a terrible sentiment. Everybody that was trading that didn't deserve, arguably, these assets are out of the market. The banks used the opportunity to start accumulating. They're accumulating in a channel in the Wyckoff accumulation, and they all have major upside targets, much like Arthur Hayes. And I think it's just a question of time, and we'll see the pop.
This takes me back to the very profound things I think you said, CTO, 2 weeks ago. You knew high net worth individuals that had been in Bitcoin for 10 years and they lost their entire bag because of cross trading, which is lethal. And I do want to remind everybody, CTO's bringing the heat tonight. It's romance time with the fire behind him. And the links for all these legends are below, everybody. So make sure you follow them, subscribe to them. We're streaming to all our channels so you can follow us all. But that's good insight, Marty. I saw an interesting quote here as well. People are still worried about quantum. You ask anybody that understands computing, we've tackled this a million times. The amount of qubits required to hack Bitcoin are far in excess of hacking any healthcare system, the Pentagon, any bank, government, etc. People are still freaked out about quantum. And could that be a piece of FUD, CTO, as a technologist, that's putting people into precious metals because you can't hack gold? Or maybe you can if you're buying paper gold. Tell us your thought.
I mean, I'm not particularly worried about the quantum, but I mean, when people like Vitalik, who is one of the brightest mathematicians around, start talking about it, then yeah, it could absolutely happen. But I'm not worried. I think in that case, if it actually becomes a thing, we will just start upgrading the protocols.
Exactly.
I think it will be more like, the millennial shift thing where a lot of money will be flowed into a lot of industries to upgrade stuff. Because it's not, crypto isn't the main problem here. It will be in all kinds of hardware and software and chips and protocols everywhere. If we can't rely on the cryptography that everything is built on basically today.
Yeah.
So I think it was going to be fine if it becomes real. Bitcoin and all other protocols will be upgraded.
Yeah. Did you guys hear about that DDoS attack, the fourth biggest attack in history, also going after Solana? Marty, did you hear
Solana
about
and
that?
Sui.
Yeah.
Yeah,
Why
they
did they
initiated it
attack?
during their conference. They initiated it.
Yeah. Well, why did they attack those two chains? Are they looking for a financial reward or just to take them down, or?
I think it's because of imminent threat. I think once again, it's because these networks pose massive threats to several major players in not only the sovereign, but in, institutional world, I think. And once again, just like everything, it might have been a test. I mean, remember, these DDoS attacks only live at the RPC level. It's not on the blockchain. Basically, this is internet attacks, right? Remember, everything to get into the blockchain has to come through the internet, the public internet, through RPCs. So these DDoS attacks basically just overpower the RPC, endpoints, so that people can't run their transactions, even get near the blockchain. So it may have just been extensive testing of all the new RPC technology. It might have been an adversary. It might have been a North Korea. It might have been a Cardano or a competitor to Solana. And also Sui. Sui was also attacked at the same time. So once again, we're in a stage of adoption and testing, and you never know. It's all speculation as to who did it. The important thing is that it survived. Barely even affected anything, which is just a huge hat tip to all of the improvements made to Solana from the previous DDoS attacks, and especially the move away from the Google RPC technology to create their own. So once again, it was a test, in my opinion, and it failed, just like everything. And it just shows the resilience of crypto. But I think the more important thing is what CTO said, and that is the quantum risk. Firstly, we're looking at a 2030 timeframe. First of all, there are no quantum computers yet. It's still very theoretical. You can't really point at any credible actual quantum experiments at this point. But the biggest risk to quantum is not crypto. Crypto is by far the strongest quantum resistant technology for financials. It's the central banks. The central banks have the oldest, ridiculous technologies, which will be the first to get attacked. And
Medical
the internet
centers,
itself,
governments,
the internet
banks,
itself will get attacked.
all toast.
And that might be why banks are all of a sudden turning towards crypto, because they realize that there is an outsourced third-party build out of the technology that they need in order to keep their ledgers safe from quantum attack in the future.
Good stuff. That's enough on quantum. And I know people, like even some very good experts, are worried about it. But literally, if quantum ever gets to the level where it can take down Bitcoin, we got way bigger problems on our hands, because that means everything else is toast. That's the simple fact. Like, plus, we're 8 to 10 years away from Bitcoin being in danger. And final piece is they can quantum proof it. They know how, and they will.
Oh yeah, your bank account will be zero way before crypto gets attacked.
So this guy came out, a friend of yours, Marty, Charles Hoskinson, is explaining why Cardano isn't fast, because it's too decentralized. Complete BS, but I just want to share that anyway. Let's move on to the next story. We have MicroStrategy. They put in another nearly $1 billion into their cash fund to be able to pay dividends on their preferreds out for the next 2 to 3 years. That's pumped the price. The Bitcoin miners are pumping. We are seeing signs of life in the whole space. And this guy, he is a very high net worth individual. His name is Steve Cohen. He makes some very clever investments. He just bought a truckload of MicroStrategy as well. He's at a company, I think, 0.72 Asset Management. Owns. I think, is that the New York Knicks? I don't know baseball very well, but big investors are coming in. They're putting their foot in the water. Mando, is this a positive sign for you? People that never touched this stuff before, that run a lot of money, are stepping in.
Steve Cohen's kind of infamous in TradFi. Ran one of the most successful funds of the last couple of decades, and then got caught up for insider trading. Essentially, he was known for like speaking to experts or getting very close to past experts at firms, and then them trading some of the stuff better than expected, let's say. But he is very sharp, and the fund 0.72 is very sharp too. So if they're taking a significant stake in MicroStrategy, I think you pay attention.
I know we've got a hard stop today in about 10 minutes. This is interesting because I'm seeing a lot of this and seeing a lot of this for over the past 6 months. You have like hardcore Bitcoin maxis a year ago were pivoting to MicroStrategy. Interesting, a little late to the game. Now you have Bitcoin maxis and hardcore Bitcoiners all talking about AI. And Tesla is the name. We had an interview with Pomp Gushes, and he was gushing all over Tesla. He said the company is going to be re-rated. It is the dominant AI company, the dominant robotics company. It's going to create a new industrial platform for AI, real-world data, integration, yada, yada, all the stuff we've been talking about for years. But he also said something very interesting. He said it's got a very loyal retail base. He called the Tesla investors, I think, rabid, like rabid dogs that they'd never, ever sell. And his point that I found most interesting for a Bitcoiner to see from the outside is all these rabid dogs are not going to sell their Tesla, but as the stock gets re-rated as not a consumer goods company that sells rubber mallets or something, but a true AI company, that's going to cause a huge stock surge. As all the TradFi money comes in to allocate to this AI play, there isn't enough stock to go around, and he believes it could go very high. Any perspective on that, CTO? You first, because I know you know Pomp as well.
Yeah, I mean, huge credit to you here, James. You were talking about Tesla when the majority of people were talking about when it will go bankrupt, basically. Now it has pumped beyond anyone's wildest dreams. Same like gold, same like silver. Now, after the pump, people start talking about it because that's what people want to hear. They want to hear about the things that has already gone up. No one is usually interested before the pump has happened. Now, Tesla has pumped a lot, and of course it could continue, but the time with fairly low risk to enter Tesla was much earlier. When, James, you were really the pioneer here, and we have talked a lot about it on the channel as well. So I'm trying to not listen too much about to people talking about things after it has gone up, because I think the reason they're talking about it is more that price has gone up. Then I'm not saying he's wrong. I mean, Pomp is a smarter guy and everything. So of course it could absolutely happen. But I think Tesla is a long-term perspective. All those things in Elon Musk's scorecard for his compensation, that could happen on a 10-year perspective. Absolutely. I'm not saying it's impossible. But I think Tesla is a long-term play. I would love to see them pivoting more into AI and less about building physical products, because building physical products is in competition with Chinese companies. It's a very difficult thing to do, even if you're Elon Musk. So I hope that they pivot more into the AI portion. And I don't know how they will separate XAI from Tesla. And James, I would love to hear your thoughts about that. What do you think? Do you think they will move more of those assets into Tesla?
That's one of the most interesting things, is the synergy across the Musk industries is absolutely insane. Data centers and space has been the hottest topic for the last month now. Everybody's buzzing about it. Who's going to make those chips that are radiation proof, that are going to go into space? That is Tesla. They're building them right now as we speak. So it is way beyond a car company. And we have had incredibly dark days. I mean, we had a fall to 106 when he had to dump to buy Twitter, that he was forced to by a court of law, which thank God the courts forced him to do that, because that changed the world. And then we had all the FUD with the presidential election and the haters and the terrorist attacks. It's kind of crazy. But I going back to the point though, and Mando, you've seen this happen before, where all of a sudden a narrative changes and then people chase. Is this Tesla thing? Is it like silver now? Everybody's like, "Oh, look, it's silver. It's $66. Should we buy it?"
I think this. I mean, we spoke, maybe touched upon it before, but there's something fundamentally shifting right now in AI, in that OpenAI, which is kind of at the center of this big AI trend, people are getting pretty worried about, and many of the companies around OpenAI, people are also getting worried about, whether it's Oracle or CoreWeave, or that's to an extent Microsoft, but OpenAI looks like it's maybe going to be outcompeted here by some of the other hyperscalers. And that's, people are getting a little bit worried about the AI trade because of that. At the same time, people are getting very bullish on people who are building their own hardware and can be seen independent of the, let's say, the NVIDIA and OpenAI wheelhouse, let's say, of which Google and Tesla are probably the two strongest players. Amazon maybe to a certain extent too. So these hyperscalers plus Tesla seem to be the ones that people are getting the most bullish about, even as OpenAI looks like it might sour. And if you look into the OpenAI story, I actually think that one isn't that pretty here. It kind of reminds me a little bit of WeWork, as they're trying to get to an IPO, and SoftBank's at the wheel trying to get to a higher valuation, and they're burning insane amounts of cash, and suddenly the product doesn't look so good versus the competitors. I think it's not in a great scenario here, which could, sour certain bits of the AI trade. But I do think Tesla and I think Google look incredibly strong.
Yeah, and by the way, there's also something that happened. Elon waited and he was forced to get into the LLM AI business. CTO, back to your question. You can now literally control your car with Grok. You can talk to 1,000 PhDs as you drive along and ask the deepest questions on the planet, and you'll get a truthful answer, by the way, unlike other LLMs. You can ask Gemini something that's political. It'll lie to you or tell you it can't answer you. Same thing with OpenAI. They are skewed to give you a certain narrative, whereas Grok will give you the truth. But you can specifically tell your car to avoid all unprotected left turns, or stay away from freeways, or take me to In-N-Out Burger, and then a nice place to have a view and eat a meal. It is crazy how they have taken the best AI in the world, and now you can control your car with it. So that is a huge quantum leap, CTO, for you. But and Elon is basically one already. He's building more coherent compute than anybody else on the planet, and he's still 10xing it every year. Nobody can catch up, even though when Sam Altman says he's going to borrow 1.4 trillion to build out the biggest data center on the planet, same with Zuckerberg, they can't make it coherent. So they're never going to be able to catch up. And that's what's kind of fascinating. Thank you for that, Mando and CTO. Marty, final thoughts from you on this Elon Musk fellow as a technologist?
Yeah, as a fellow South African, I mean, the very important thing about Elon Musk that people misunderstand is that Elon Musk's technology and his philosophy is very deflationary. That's why, Kathy Wood also jumped on board with that. These automation, AI, robo-taxis, all of the Tesla IP and mindset and strategy is all about deflation. That's why Elon Musk, when he got exposed to the government, got so frustrated because of the money printing. Because you must understand that the rich benefit most from inflation. The rich want inflation. Okay, assets get more expensive and the wealth disparity increases. They get richer in proportion to the rest of the people. So they've always actually loved inflation. That's why we've seen so much money printing. And I think we've seen a changing of the guard with obviously Trump and Musk, with a deflationary attitude. Stop printing money. Use technology to lower costs, to make the cost of living less. And I think, Elon Musk's also obsessed with energy. And I think AI, he sees as, his primary philosophy is that AI can render things like money, work, obsolete. And obviously supercharged space, autonomous robots going to Mars, space-based computing for AGI, all of this stuff. And I think at the same time, he believes that conversely, winning AI will make space irrelevant because you'll have super intelligent AI, which could solve the energy problem. There's infinite solar power in orbit. So I think that Musk has a philosophical view to use technology to create deflation, which is to solve the problems of the human race, to make life fairer, to make life more equitable. And, he's coming straight up against big tech and, the existing political oligarchy, which are big money printers, love inflation, want to be rich, and they're old and they're dying and they're angry. And so I think you've seen that play out. And obviously in the news and the narrative, it's very hard to distinguish. But I think ultimately that is where we are, is Elon Musk's philosophy is very contradictory to the current establishment.
Yeah. We have.
So will he win? I think so. I think so because the old people are dying and leaving their money to young people, which are much more aligned with Elon Musk.
And two very quick questions. One, we'll get to this one in a second, but it's tax season. A lot of people need to take losses. Very quick around the table. A lot of people are sitting on altcoin positions that are, down huge percentages. Should they just bite the bullet and ditch them, take the loss, or hold and pray for 2026? Mando, you first. It's a tough question.
I wouldn't be holding altcoins right now, if I'm honest. I want to see more strength in Bitcoin before I start going into altcoins. So for now, I think there are other assets that can have altcoin-like return profiles with maybe a shorter time horizon. Right now, they seem like the sort of thing you could hold for a while, and it's will be painful. So if you want to realize a tax loss, that's probably a good time to do it right now.
Okay. CTO, real quick, ditch your alts that are really dead and write them off.
I mean, holding altcoins has rarely been a winning strategy. It's better to try to manage risk and hold them during uptrends only, because most people get surprised of how far down altcoins can go, and they discover it only with experience. It seems like when something has gone down like 90%, it can't possibly go lower. Oh yes, it can. It can go another 90% down to a total of 99% and so on. And people kind of don't know that. They think that it's like a stock or something where it has a reasonable price. So if nothing has changed, it shouldn't change much in price, but it does. So of course I can't tell anyone what to do. I don't know what will happen. Perhaps it goes up from here, but as a general strategy, if we look at the historical prices of crypto, it has not been a winning strategy to hodl altcoins compared to try to only hold them during uptrends.
Good stuff. We have one last topic and then we do have to wrap because someone has an important meeting. AI. We touched on AI. AI will require micropayments at incredible speed to support all token creation for decision making around the world. Agents, etc. There is no way in hell Bitcoins can support it or the fiat system. Marty, I hold all my Solana for a long time and I'm not letting it go because I believe there will come a day where everything will be tokenized and micropayments will be absolutely critical, especially in the AI world. Talk to us about your view on the future of AI and how it's going to be paid for. It can't be free.
Yeah, I mean, agentic finance is the next frontier. I mean, that is the, where we get the end of the subscription model, and the dawn of microtransactions, which has been, as a computer scientist, been a topic of discussion for 20 years. Is how can we do microtransactions? In other words, you pay a small amount, very fast, instantly, low friction for usage. So you pay by use instead of this legacy subscription model where you pay whatever they say once a month on a credit card, and whether the quality is good or not. And I think that high-speed blockchains are the solution. And obviously, we saw Solana unveil this X402 thing, which is not directly from Solana, but like everything they do, it's through an ecosystem project. And if you remember, this comes from HTTP 402, which is in the original hypertext transfer protocol dialect, which was a payment required status code, which has been there since the beginning. When we were building the internet, we made this payment required, but we could never actually implement it because of regulatory constraints around credit cards and KYC. And this seems to be the re-emergence of it. And fast blockchains Solana, Sui, etc., can absolutely make this possible. You just have to keep a small amount of assets in your wallet, and behind the scenes, these micropayments will take place. And now that's important for humans, but it's much more important for AI, which do machine-to-machine transactions. We had B2C, B2B, C2B, C2C. Now we have M2M. AI is machine to machine. And so I think these are all technologies that will enable that and take advantage of the sub-second finality and ultra-low fees. And I think, and you can't do this with L2s. You can't do it with Bitcoin.
No,
you can't do it with
Lightning.
L1. Exactly.
Just some number. There are trillions of tokens being pulled every single day, and there's 1 billion users of AI. You need something extremely fast. Amanda, final thoughts from you? AI, crypto, convergence again, but from a payments perspective, possible or a dream?
No, it's 100% happening. I'll just come back to that original thing that I said earlier. The only issue right now, I feel, with L1s is that they are starting to run into TradFi valuations around this sort of stuff. If we're going to start putting all of TradFi through them, people are going to value them versus like Visa or MasterCard, all this sort of stuff. And that is a two-edged sword. We have a lot of block space here, and not a lot of it's being used. Only a couple of the blockchains are really being used. So I also think it could be a big value erosion for certain bits of crypto.
Super answer. CTO, final thoughts from you, and then we wrap, my friends. And happy holidays to everybody out there.
Mm-hmm. Yeah, I mean, payments is a huge use case, no doubt. In what form, we'll have to see. I mean, the direct payment protocol didn't really take off in HTTP. Instead, you end up buying credits or subscriptions. But that's partly because it's humans in the other end. Now with machines, maybe they can manage the complexity. They don't need to buy a subscription. They just need to pay exactly for what they need. So I think it's very exciting. I'm a huge believer in the payment use case. It's a huge business, and that TradFi is charging an arm and a leg for it, which we will disrupt for sure with this industry. And Merry Christmas, Happy New Year, Happy Holidays, everyone, wherever you are, whatever you celebrate.
Exactly. Thank you, all my friends. Mando, CTO, Marty, links below for these legends. Happy holidays. See you after the Christmas holiday. Take care, guys.
Happy Christmas, guys. It was a wonderful year. Remember, we came from 16,
I wouldn't say a wonderful year, Marty.
We went from 16,000 to 126. Just keep some perspective.
Well, 2025 was a lost year. By the way, actually, interesting note on that. We had the first red candle in the 4-year cycle ever. That's weird. So we had a very green candle in the first year after the bear market, green candle second year, third year red. That's historic, which could bode well for a green candle in 2026. We shall see. This is the annual candle, by the way. In case anybody's fact checking at home. Take care, all. Have a great holiday. See you later.
Happy Christmas.
Bye, guys. Thanks.